I'm just going to talk. I can't worry about this. Okay, so what I do is when I'm looking at a stock and I'm watching it play out for a couple days, and I'm watching how the market makers are pushing the stock and then dumping the stock, pushing the stock and dumping. So I really watch a lot of that in how it trades out. On this day, you could see they popped it and they yanked it. And they ran it a little bit, gapped it down, ran it up, and then gave it all back. So this is telling me that on this, in just a few days, in a day or two, I can analyze the stock enough to understand, okay, this stock likes to give up their gaps. Okay, so now today, I want you to watch carefully, kind of like where it was coming from, okay? I want you to kind of just go with me. So today, I want you to look at my notes very carefully, okay? This stock will pop at open to 28. It will top off, and then we are going to have a Yank City down to 18 and under. So I'm guaranteeing you a 10-point pull. If you did $5,000 shares, you would have made $50,000 on that trade. If you did 10,000, you made 100,000. Okay, so it's recording, Sergio said, but unfortunately, it doesn't show time. So I saw it. So to me, this was nothing more than a short. Now, how did I set that up? Okay, listen. If you close at 16 and you're gapping up 8, what is the first thing that comes to your mind that will happen at the open? What is the very, 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 very first thing? The very first thing you have to understand that will happen is that the shorts that are overnighting their short position because of the big run yesterday, they're shorting this in hopes that the stock will pull to 10 at the open or be gapping down to 12 and sell off. They're betting that this is going to drop. Now, the problem is with a lot of these retail short sellers is their timing is off. This is how so many pump and dump rooms and small cap rooms fail because they don't really think enough on the trade itself. They don't understand it. I would never want to overnight short that. Okay? Never. Because I'm already being held up. You see this hold up right here? They held it up to the 15, 16. Now, they could have held it, did an offering, and it plummeted it, right? Great. But because it was so thick and it held up on that base, there was no reason to want to overnight short. So for me as a trader, as a day trader, I want to wait till the next day. Now it's imperative that you understand my thought process on Apron. Okay, so we gap up and we open up here, right? $3 or $4 up. Then it starts to run in pre-market. Now about 6 o'clock, 9 o'clock your time in the East Coast, it's sitting here at $25 a share. Again, a lot of retail short sellers cannot cover their positions until the opening bell. So that's going to cause a squeeze because they're all going to want to escape because they're already down. Let's say a guy's right here shorting 1,000 shares overnight. He's thinking it's going to come down to 10. His timing is off. He wakes up, he's down 5 grand. He's down 6 grand. He's down 7 grand. He can't take any more. He's got to get out. Now multiply that by 100 or 200 different traders. Right? They got to get out. There's nowhere to go but out. You've got to get out. You follow what I'm saying? And um, so me, when I come in, because I've been trading for so long and I understand these stocks, it was very simple for me. Okay. For me, I just kind of looked at it and went, okay, so we're going to pop and I'm going to cap it somewhere. I don't think the stock will go more than 26 to 28. And after that, it'll stop and then it'll just plummet down and break 18. If it snaps 18, you get the rest. And that's what it did. So it was very easy for me to play this stock. Okay. Now, how did I anticipate another 2 more points out of the gate? Because I anticipated a decent squeeze. Now, I could have been like, you know, this could go to 30, but honestly, Apron at 30 didn't make sense to me. Maybe right here from the opening bell, another 2 to 3 more at 26 a share. I'm thinking another 1 to 2 point pop at the open. 28 should get it, and we should get the short to come in. And this was a pretty well-defined double top. You see how they just wouldn't push? I mean, it was so you could have shorted right here, shorted here, shorted here. They weren't breaking back out to highs. There was no. This was all lower lows setting in. Look at the lower lows. This is a lower low, lower low, lower low. halt. I mean, right here in a span of 1,000 shares, that's $10,000. Okay. So it's all about really truly understanding how the stock works. Knowing down here the way they traded, you see this? Knowing down here, I can tell that these market makers like to give up their gains. They like to take them and wipe them out. So that told me already that this was going to have a big drop. The second one that I did was Borella. Okay. Now this one was a little bit easier for me to understand because now Borella, the news itself didn't really justify the move yesterday from $2 to 14. Okay. I think we had a lot to do with that because of our room. However, I want you to look carefully this morning. When it opened up, all right, it popped and then sold off. Okay, and it dumped to 11. But the minute it started to gain momentum back up, and look at the 6 o'clock timeline. You see how they held? Just look at the 6 o'clock timeline. See how they held this flag above the 13 level and that 14? They were holding it. So we pretty much are at even. This told me, with these buyers here, that they're going to most likely try to push it up and shorts will try to squeeze it out because shorts are in a bind over here, right here, because they too were overnighting, but they didn't get a chance to cover. All of a sudden they're walking and they're seeing, oh my gosh, the stock's starting to move. I better cover at the opening and just take and hopefully get out flat on their 14, 14, 50, 15 shorts. So what I'm doing is I'm overthinking the trade because I'm anticipating the move of a retail day trader, what he's thinking. But now I multiply that by about 50 to 100 day traders that overnighted, and that gives me the squeeze I'm looking for. So once I saw it here at 12 to 13, I felt very confident the stock would probably ramp up to 16, 17, and then dump. Inevitably, it was going to dump, so let me kind of tell you how I walked it through here. Bamarana, 17 to 18. Now, because the squeeze was so intense, you couldn't, even if you tried to cash out at 17, 18, you were still going to get more money. Okay? You were still going to get more money. So for me, when I looked at that, when it started to hit the 17 in pre-market alone, look at I mean, I went from 14 to 17 just because I wrote it on my notes. But when it opened, it squeezed even more. But again, the double top put in. Again, there's your topping. Look at this. This is a defined topping. There's a lower low, lower low, lower low. Okay, there's no higher highs. It's not moving up. These are higher highs right here. See? Higher highs, higher highs. And this is a defined topping. So it wasn't breaking out again for another move. This is your short. This is your short. You could have shorted here with stops at 21. So to me, the risk reward to the downside, uh, the fact that I got from 17 to 23 just showed me, okay, it squeezed even more. Now, if I had to do my notes again, I still wouldn't have called 23 as a topping. I would have maybe 20. This was just a parabolic move with a million shares of shorts. Just, and we got puddled in there. Okay. So these two really, really worked. Now, Zoom, when I was looking at Zoom this morning, okay, Zoom keeps hitting this 118 area, 120 area. Now that we broke out, I want you to look at Zoom this morning. Look carefully. Zoom this morning, okay, when it gapped, you see this gap right here? Okay, when it gapped right there at 123 and then at 6:15 it hit 124. I'm thinking, what's this? I saw this 123. It told me, this told me. And I want you to recognize the chart pattern. You're closing, you're gapping up, even after hours move to the upside. You're still gapping up. This tells me I got range in the stock. That means that this stock will go right back up to these areas and probably even more. So my experience told me to take the stock long, all right, and look for another move to 128 to 125 because we were already at 123 and it hit it with very light volume. So, and then it hit it again in pre-market at 6 o'clock. So I figured, well, if it pulls, I don't see it dropping more than maybe 119, 120. But once it breaks out on that flag, I'm looking for 125 to 128. And then I could probably get a decent short in there. The fact it ran to 130, I mean, hey, 132, a matter of fact. So again, this stock is going to be in play for a few more days. Tomorrow, this thing could plummet down to 125, depending on how the market opens, or it could gap up to 135, and then we get a pullback for about 5 to 10 points, bottom curl and long for the upside for another move higher. You all follow me? So that's how I put Zoom together. Okay. Now, for me, Boeing was weak this morning. Okay, Boeing was weak, and we know that it's been selling off, and we know that yesterday it held that 89.90 area pretty well, even on the massive sell-off. But so today I thought, well, I like to see Boeing dump to 90 at the open first, right? Once it dumps, I could probably squeeze it back up to 100, 102, and then fade it again. And that was really the play on Boeing, the way I looked at it. So when I went to Boeing, I kind of just scripted it like that on Boeing, which was uh, right here, Boeing. Okay, I would prefer a pop at the open to 102 for a quick short, but the bottom, once it snaps 95, we go to 90, then a small bounce, okay, and then downside again. So 90 was really the target, but I wanted to give you room to 88. I didn't want you to get shaken out if it hit 90 and it dropped to 88. I didn't want you to shake out. I knew that it would bounce from that 90 spot because that is a very technical spot for that stock to get a little bit of a rebound. Okay. But the rebound was going to be maybe 10 points, which is what I calculated. So if you look at the 90, how it played out, there's the 90, and then there's a 10-point bounce. The fact that I got you a little bit more, I think a 100 to 102, that's a pretty damn good job. But you see how I called it? I didn't want you to think, oh, this is going to 110, 120 to fill this gap. You can't. You've got a lot of things going on the wrong side of Boeing right now. Okay, you got a bailout that they need. They're a $50 billion company asking for $60 billion. That's a problem. That is a massive problem. And when they put out their orders, which are going to be negative 100 orders, I mean, there's no revenue coming in, but they got a 500 billion on the books. But with these stocks all plummeting, I mean, it's very difficult to stock the company operate. Now they're trying to get bailout money now. This is ridiculous. This is a $150 billion company a month, 2 months ago. So these people, in my opinion, are still in trouble. If we get another limit down, this stock is going to break and it's going to head to 75 and $80 a share. And I think this is why they're kind of holding it. They don't want it to come down that much yet, but I don't see any positive news on Boeing. I just don't see it, traders. I don't. Okay. So Kodak was too easy for me. This was just a slam dunk for all of you. For me, it was just there's no reason for Kodak to be in. And the news this morning was very, very stupid. I'll read it to you from briefing because I don't have the other system up. Kodak's news this morning was simply, I'll tell it to you. Okay. Kodak was JB receives license in India to sell COVID test kits. Okay, that's just not going to do it. There's no dollar amount. There's no money amount. It's just you're released to sell kits. Well, why don't you give me a figure? If the headline said Kodak was going to sell released 1 million or 2 million units, great. But the fact that the way they wrote it was licensed in India to sell kits. Okay, it's just a JV receives license in India to sell. Okay, can I get anything with that? So to me, it's a pop to 12, 12.50, and it slammed down to 10. Fill the gap. So that was pretty simple. Okay, now for Wynn. Wynn was a little bit. I 3, 4 days ago, I wrote out that Wynn's bottom was 35, and I still believe that very firmly. I do not see Wynn at $25. I don't care how much wreck we do the market even more. I just don't see it. I don't see it. But prove me wrong, and I'll remember it. But I don't see it. I don't see it down there like that. So for me, for today, I was thinking, you know what? I don't know if I can get 35 again, but I know I can get a pull to 38. I think that's really what I was looking for on that one, right? Hold on. Win. I figured 35 to 37, I'd play it safe. I didn't think it would hit below that. But if it did snap, then this would be your absolute bottom. But for me, I'm thinking this thing will probably pull, bottom curl, and then hit the 45 spot. Well, traders, it went to 52. And that showed me that too many investors want to play this stock. There's too much people buying the stock. And they're buying it for the retirement account. So tomorrow, if the market is limit down or pulled, this will go back to 45, 44. We'll get another snap, but this time the snap will only go to 40 to 42, bottom curl, and then long again. Fresh investors will come in and buy that stock, in my opinion. But I want you to remember that key level is 35. 35. Okay. Then, for our basic, so then our basic, the TDDs, the shops, the Teslas. For me, these felt like stocks that were going to run today. The way they were gapping up this morning, kind of. See, now I want you to look at Tesla and TDD. Now, for me, I felt today's floor on any pull at the open on TDD was going to be, I think I said 138. Yeah, 135 to 138. That would probably be the floor. So that's what, 136, 137, 136.50. And then the stock would give me a nice ramp up to 150 because TDD has value. And I told you that I'm looking for TDD at the worst possible pull is 120 to 120, 100 to 125. Well, we didn't have a limit down, so I didn't see the 125. All I saw was the Dow fluctuating down 400 points. So that told me, well, AJ, you're already down 4 from 144. So I bet you pull 5 more points at the open, and then you nail that 135 bottom curl it, and then wrap it up to 150 because that would probably be the bottom. The fact that we were only down, uh, 400 points, it really gave me the range. I could see the stocks more clearly because that gap down told me, well, okay, we'll probably pull 3 or 4 with TDD. We'll probably pull 4 or 5 points. With Apple, it was kind of like, all right, the pull maximum to me would be in the 240 range because again, I want you to understand the Dow was only down 400. It wasn't down 900. It wasn't down 1,000. So at the opening bell, I readjusted the numbers. Well, if you're down 5 and you're sitting at 241, then I think you kind of come down to the 240, 238. You're not going to come down that much, but when you bottom curl it, you're going straight to 252. And that's really what I saw on Apple today. So again, I ranged everything based solely on when I was putting these deals together. I ranged it solely on, well, the market isn't gapping down that much, right? I don't have a limit down. I don't have 1,000 down. I don't have 800 down. I don't have a little fear out there. I felt today was more, I'll get a small pull at the open, bottom curl, and long it to the upside. What's the topping? Probably 252, 253. And that's exactly what Apple did. TDD, now I figured the topping would be in the 150s, which I still delivered 15 points. You can't knock that I didn't deliver 15 points. The problem is the stock there's too many investors that want this stock. So the funds were buying it up and they want this stock for long term. This is a very good company that just got clobbered. I mean, look at that, just straight downward. So at some point there was a floor on TDD, and this floor to me was. I still think if we have a limit down and a pullback, we will see 125, and then the absolute lowest will be 100, and that's when you buy that one. But today had a really good, nice short covering bounce. Fresh investors coming in buying a weakness. We'll probably add at 125 if it goes. This was a really really good play today. And then the other ones, I kind of just gauged everything like I always do. So, I mean, I felt that shop would pull to 316. Again, traders, I'm gapping down 14, right? Gapping down 14. All right. So I'm already gapping down to 322. So the stock, because the Dow was only down 400, I'm not going to get a huge pull. I'm going to get a decent pull, but not enough where it's going to kill off. It's not going to be like a fader to slam it down to 305. So I gauged it again. This way, if you got in at these areas, you were going to get 20 to 30 points on this trade. All right. Now I want you to watch how it worked. Okay. Shopify. Again, because the market was pulling only 300 to 400 points, Shop wasn't going to pull to 305. You see these 305 areas? How it hit on those days? Well, these days were when we had limit downs. We didn't have a limit down. So to me, the lowest this stock could have gone is 316, is 318, 316. So that's what I put. Then from there, I wanted you to play Shop to the upside for about 20 to 30 points. And that's what I did. You see? So if you look at that, see, there's the pull. So if you started at 318 with room to 315 and you had an average of 316, 316.50, and now you count the points. So how many is 20 points, right? 20 points is 336. That's 336. How much is 30 points? 346. And look where it stopped. 20 points. Actually stopped at 30 points. So I gave you 30 points on this trade. Look how I calculated that. This will give you a 20 to 30 point play. So again, everything was calculated. Everything. The max it would pull, where it would see it, where we'd get the bounce. Then I just kind of threw in some nice aprons and bound runs for you. I gave you Wynn because I knew if it snapped, you'd get it back up to 45. Boeing, I figured would drop to 90, and then back up to 102, which was a 10-point play. So everything was designed for you when you came in to make money. I just needed you to pull the trigger. And how do I see this? I'll show you how I see. When I see Thomas come in, beautiful trade. Trading to live made over $6,000 today. And another thing too, I didn't think they would do a limit down today, and I'll tell you why. I think that if they tried to pull that crap, we would probably get a day or two off on the markets. And then when we would, and the reason is for that is because I think they're going to want to put a stop to some of the selling. But the problem is, let me tell you the bad side of that, and this is probably why they don't do it. If you halt the market for a day or two, let's say we get an extra 2 days off, right? We're just chilling. When the market opens, can I ask any of you, what do you think the market will do? What do you think the market will do? Right? To me, there's only one answer. It ain't gonna pop. The market's just gonna just dump right at the open, you know, and it would dump hard because now, all these people, now you got that fear impact and people just wanting to bail out and get out of their stocks because they don't want to be caught into the hold. So that would really take stocks to hold on a level. But I think what they did today, the way the market traded today was really on point, and we needed this today. So I was really, really happy the way the market responded today. And to be honest with you, there's no really want or warrant for this to be up other than they need some sort of love in these stocks. Otherwise, they're just going to keep plowing down lower and lower. Now, overall, what I love is the fact, okay, this is kind of just my idea. How I can tell the shop that the market isn't gonna this isn't bottom. Shop is a $500 stock, but even with today, they got it stuck down here at 338. So why is that? Right? This was a necessary bounce, yes. All right. But in the end, the stocks are going lower. This is why they're held at a certain point. If you look at Apple, same thing. I mean, they're holding it here below 250 for a reason, right? If the market was bouncing and showed headwind, this would be back up 260, 270 and start ramping back up. This is not. To me, this is like 240 will come and then bam, 225 will come. I think Nvidia will see 175. That's why they're also keeping this down. If you look at Nvidia, they're keeping Nvidia down here in the 200s. I mean, it pulled to 180. I see 175 written all over this stock. This pause is just another, we're heading lower. So I want you to be aware of that. So be careful for your retirement accounts, unless you buy Wynn at 35, add at 25, have a 30 average. Yes, for your retirement accounts. But from a days trading standpoint, I see lower. I see a lower coming. Okay. So, hey, that is today's secret sauce. So I hope that you enjoyed that. And thank you. All right. So let me stop that.